What's going on, guys? How are you? Welcome, welcome. All right. All right. How's everybody doing today? It is 6:58. Thank you for being a few minutes early. For those of you guys who are coming in, do me a favor, pop in the chat. Just give me a nice thumbs up. To type in yes. Make sure that you guys can hear me fine, and let me know if you can see my screen. Let me know if you can see my screen, guys. Nice thumbs up, please. Thumbs up for those of you guys in the chat. Can you guys hear me? Am I good to go? I want to make sure that before I start talking, you guys can hear me. Let me pop this in the chat. Can you hear me? Awesome. Thank you, Regina. And then we're gonna be showing the presentation. So hopefully you guys can see my screen. Do me a favor. Let me know if you can see my screen. Thumbs up. Let me know. Awesome, 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 guys. We're also going to be going live simultaneously on YouTube, Instagram, TikTok. I really want to make sure that I help as many people as possible. So for those of you guys that are here on the webinar, thank you guys for being early. It is 7 o'clock on the dot. We're going to get started in 1 minute because I do want to respect your time. And we're going to be going through this for the next 30 minutes. And we'll go ahead and do a Q&A as well. Okay. So thank you guys for joining. Listen, the fact that you guys are here, 7 o'clock Eastern time on a Thursday, just shows me how serious you truly are in buying a home, right? And it really is about getting educated, and this is why we're here today. So thanks again. It is 7 o'clock. We're gonna wait 1 more minute so we can get started. Cool. And then for those of you guys who are joining on social media, I'm going to be going through a presentation that I have presentations for first-time home buyers, and we talk about different counties because there are specific grants. So even though you may not be in New Jersey on social media, a lot of this information is universal, and there are grants that are available all across the country. So we're going to be spending the next 30 minutes going through this presentation, and at the end, I will be taking a 15-minute Q&A, or we can go longer. Doesn't really matter. What matters is that for those of you guys that are here today, you get your questions answered and you feel more comfortable taking the next step forward on your path to home ownership. Guys, my name is Eric Estevez, and I'm a branch manager at CMG Home Loans. I'm a 9-year mortgage veteran. CMG Home Loans is the third largest retail lender in the country. And we help home buyers and investors navigate all types of financing, from traditional mortgages to complex construction, commercial, non QM loans, right? We find the right solution for you, right? And we're really known for our transparent advice and our strategic guidance. We're your trusted partners, and we're committed to making the mortgage process smooth and successful. Okay. Now, as a first-time home buyer, okay, I know how you guys are feeling. You guys may be feeling concerned, stressed out, intimidated, anxious, uncertain. You can be feeling all or some of these things, right? I understand that. What my job here today is, in the short time that we're here, is for you guys to walk away feeling less of all of these feelings, right? What I want to do is become your mortgage advisor. So this is a start of it. And if you guys are going to continue to take the next step into the path of home ownership, I'm going to guide you and educate you. Your home buying process should be focused on just that, on the excitement of entering into club homeowner. It's not an easy process, but that's why who you work with really matters. And it really starts with what you guys are doing today in getting educated. So I applaud you. Okay. So I do have a question for you. I want you guys to be interactive here in the chat. Right. I want to see what level of knowledge we have, and it doesn't really matter. No answer is a wrong answer. I want you guys to comment on the chat. What credit score do you think you need in order to buy a home? Pop in the chat, guys. What is the credit score that you think you need in order to buy a home? Please pop them in the chat. Let's be interactive. We have Heather saying at least a 600 credit score. Thank you, Heather, for being the first to respond. I appreciate you. Anybody else? What is the minimum credit score? We have 730. Michael says 730. Okay, thanks for the interaction. I applaud you guys. Thank you. Guys, the minimum credit score, and we'll talk about this a little bit more in depth in a few minutes, to buy a house with a minimum down payment as a first time buyer is a 580. You can purchase a property with a 580 credit score with 3.5% down with an FHA loan, which is a government insured loan, and we'll touch base on that a little later. Okay. Now there's certain credit score requirements for different programs, but 580, I can actually go lower, right? I'm doing a purchase right now where somebody's doing 10% down and they have below a 580 credit score. Now, those interest rates and those terms may not be the best, but if you have a little bit of more cash to mitigate the risk, the bank may be able to give you a loan at a 500 credit score, right? But 580, if you're looking to put 3.5% down. In New Jersey, if you're buying a $500,000 property, for example, 3.5% down is 17,500. You need a 580 credit score to achieve that. Okay, one more question before we continue. How much of a down payment do you think you need to buy a home? How much of a down payment do you think you need to buy a home? Now, Heather, we're going to talk about this in a bit, right? So I'll be answering some questions, and many of your questions may be answered throughout this presentation, and I'll go ahead and take Q&A after, so you guys can put your questions in the chat, and we can always get back to it. But put it on here. What do you think you need? What is the minimum down payment that you think you need to buy a house, right? So we have Heather with 10% of the price. We have at least 30%. Okay. Thank you for your answers. 10 to 20% of the house price. Good. Okay. Thank you for responding, guys. Well, here's the thing, guys. I just mentioned that to buy with an FHA loan, which is a government insured loan, which allows buyers to come in with a minimum down payment of 3.5% from a 1 to 4 family home. If it's a $400,000 property, that's $14,000. If it's a $500,000 property, that's $17,500. If it's a $600,000 property, that's $21,000. Right? 3.5% for an FHA loan. However, we're going to talk today about down payment assistance grants. Right? If you're a veteran, thank you for your service. You can buy with a VA loan, right, with a 0% down payment. If you're purchasing in a rural area, and as long as the property is qualified, is in a map of a USDA zone, you can purchase with 0% down. And then depending on the county where you're purchasing in New Jersey, you can get right between $10,000 to $15,000 as a down payment grant, in addition to a possible $7,000 on top of that if you're considered a first generation home buyer, right? So there's different programs that are out there. So my job is to really assess where your situation is, so we can figure out what is the best loan program and the best strategy for you to win. So here are the 7 steps of home ownership. The first thing is scheduling a planning session with a loan officer. Now you guys are starting getting to get educated. I applaud you, right? Now to get a little bit more granular, right? You want to schedule a consultation. I have it on my information in the chat. You can go ahead and screenshot this, or you can text me 786-444-4160, right? And I will be able to send you my calendar and we can schedule a one-on-one session with yourself in a few short minutes by me asking you questions regarding your income, your type of income, and your credit and your assets. I can pretty much tell you what I think you qualify for. I can pre-qualify you over the phone. However, in order to go to the next step, you have to get pre-approved, ladies and gentlemen. What does that mean? Well, I have to verify that information. I do a soft credit pull so I can see where your credit score is at. It doesn't negatively impact your credit, but I have to see where you're at, and I also have to calculate your debt to income ratios, right? I have to verify your income by looking at taxes and pay stubs and W-2s, right? What other kind of income you have. I have to, do you have assets? What kind of strategy do we need to do if you do not have the assets, the money? Can you borrow against your 401k? These are all things that I have to look at because now, once I verify that, you get a pre-approval letter. And that's when you start looking for your home. And guys, I may be able to pre-approve you same day, right? If you fill out an application, I do a soft credit pull, I look at documents, you can get a pre-approval the same day. But what can take the longest is number three, finding your new home, especially in a competitive marketplace. You have to understand that we're in New Jersey, we're the most densely populated state in the country, across from the most densely populated city in the country, right? A lot of demand. So you're gonna go out there, you're gonna find your new home. Working with the right realtor matters, right? You want to work with a local realtor that knows how to put offers together. Is gonna find the right home for you. Is gonna win. So that way they can go ahead and number four, submit offer and negotiate terms. Once you submit an offer and they accept the offer, the seller accepts the offer, you go in the contract. And in New Jersey, for the most part, you're going to be using an attorney and you're going to be doing something called attorney review. So that way they look at the language that the attorneys are going to protect you. You do not need an attorney, is recommended, right? But most of the country don't even use attorneys, right? But you're going to go ahead and you're going to go on the contract. So once you're out of the attorney review, if you are using attorney, then you are officially under contract. If attorney review is not completed, even though there's an executed contract, you are officially not on the contract, and anybody can back away during that period. Okay, but once you are under contract, that's when the loan process starts. Right, that's when myself and my team start going deeper and ordering verifications of employment, submitting things to the underwriter. The underwriter, right? Even though they use the same systems that I use to pre-approve you as far as automated underwriting, think of it like an AI, right? It reads your credit score, it reads your income, and says, "Hey, this loan is going to be accepted for this amount," right? But they're going to double check, they're going to triple check your the income calculations, right? They're going to look at the regulations to make sure that this loan meets all guidelines. And that takes about 30 days, guys, because you're going to be doing an inspection, and we'll talk about that in a minute. You're going to be doing an appraisal, which are going to go out. This is a third party contractor that's basically gonna give their opinion of value of this house, so you're not overpaying for this house. They're going to look at comparables within 6 months of like homes within a neighborhood, right? We're gonna be ordering title to make sure title is not cloudy, right? And we can go a little bit deeper into that. But that takes about 30 days, right? And then once you get your final loan approval, you get the clear to close. That is the magic words that everybody is looking for, is looking to hear, clear to close. Because once the bank reviews everything and they're clear to close, that means that now you can schedule the closing day with a settlement agent and your attorney, so you can go ahead and sign your paperwork and get the keys to your home, right? So this process, right, lasts about 30 days once you're under contract. Like I mentioned, I may be able to pre-approve you within 24 hours, right? What could take the longest is looking for a house. There's people that are still looking. They've been looking for months. Depends on where you're looking. What is the availability of inventory? How competitive is it? How competitive are you, right? So, and then once you do that, it takes about 30 days for you to get the keys to your house, right, through your process. Okay, now, for those of you who are here, right? I know that you're looking to find out about the first time home buyer grant. The grant is a great way if funds are an issue to purchase a property, it's a great alternative. I understand that the cost of living continues to increase. The average median income in New Jersey is below the average median home price. Sometimes there has to be multiple people in a loan to qualify, right? Partners, right? Mother and child, right? I understand that that's the case, right? So because of that, right, you got to say, okay, well, how long is it going to take me to save $17,000 and $500 to put down as a down payment for a $500,000 house? Or can I go ahead and learn about these programs and see if I can get a grant, or see if Eric can get me a 100% financing for FHA, and we'll talk about that as well. Now, these grants are specific to your region. In Hudson County, right, and in most of North Jersey, you can get up to a $15,000 grant because of the prices of the homes, right? You may be able to get an additional 7,000 if you're considered what's called a first generation buyer and you meet all the requirements. Now, there are income limits, guys. So in Hudson County, right, if a couple makes more than $144,000 together, right, they may not be able to get the grant because they are over the income limit. Now, right, as family size grows, right, if you have one kid, one child, two children, right, then that income could go a little higher because obviously kids are, more of an expense, right? Children, so we can actually have a higher income limit depending on the family. But so we have to look at where are you looking, what is your family size, right? What is your income? Are you buying a single family house versus a multi-family house? If you're buying a multi-family house, then we also have to consider that rental income as income, right? So it is depending on your income. Now, what this grant is, not everything is free. Let's say you get the $15,000 grant. This is a forgivable second mortgage. That $15,000 grant is going to get tacked onto your loan for 5 years. But after 5 years, what happens? That gets deducted from your principal, right? This is a form of down payment assistance, but I do want to say this, okay? A $15,000 grant, right? Let's say the $500,000 house is 3.5% of $17,500. Let's say you qualify for the $15,000 grant, okay? You need 2,500 bucks to complete the 3.5%. But that's not all. There's something called closing costs, right? Well, what are closing costs? Well, there's a lot of people involved in this transaction, and most of them are really to protect you as a buyer. You have an attorney, you have an inspector, you have an appraisal, you have bank fees, you have surveyors, you have title companies, you have escrows that you need to bring, you have to purchase a homeowner's insurance, right? When you add all that up, right, you're gonna spend 15, $17,000 on closing costs. So that's an addition, that's a cost. Now, if you get the grant to cover the down payment and you don't have the cash for the closing costs, now Eric, how can I buy a house? I'm still short. Well, one of the things that we can do is, if we know that money is an issue, and that's why we have to do a deep dive into your case, the realtor that you're working with has to understand that they're going to ask for something called a seller's assistance, seller concession. Your offer has to be strong enough for a seller to accept that seller concession. So what does that mean, right? Let's say that I can approve you for a $500,000 house, and you see a house for $450,000 that you like, right? You can offer 465 on that property with a 15,000 concession. 465 minus 15, the seller's going to walk away with the 450, and you're in essence financing the closing costs, right? And we can deep dive this into your own personal situation once we schedule our one-on-one consultations. But if money is an issue, we can have a combination of closing cost assistance, whether excuse me of down payment assistance and closing cost assistance from the seller. I will say this, and I like to, there's always, when there's a will, there's a way. However, the more money you have, the more access to capital you have, the more competitive you are. Because if now you are, competing in the marketplace, and there's 6 or 7 offers, and you're asking for a concession or you need a grant, right? Maybe somebody that comes in and is putting 20, 30% down may seem like a better, a better bet, because what sellers really care about is certainty, right? Is this person going to close? I want to sell my house quickly. But again, that's why it's super important to have the right team represent you when it comes to the right lender, when it comes to the right realtor, when it comes to the right attorney, right? Because we all work for you so that way you can actually purchase a property. But we have to figure out where you're at so we can start developing the right strategy for you. Okay, so cool. So now listen, guys. I mentioned some of these types of mortgages. I talked about the FHA loan where you can purchase a property with 3.5% down with a minimum of 580 credit score. A conventional mortgage, right, is a mortgage where you can purchase a property with a single family property with 3% down. If you're buying a multifamily property conventional, you need 5% down. But the credit score requirement typically is a 620. Fannie Mae just passed something where you don't need a 620 to buy with a conventional mortgage. However, right, those that are passing underwriting have to put a really big down payment, right, to mitigate the risk because a conventional mortgage is not insured by the government like an FHA mortgages. I did mention a USDA mortgage, right, where you can purchase a property in a USDA zone with 0%. The credit score requirement is a 620. Now, how do you know if a house sits in a USDA zone? Well, there's actually pretty simple. There's a website, USDA.gov, that you can put a property that's listed and it pops up and it tells you that if it's eligible for a USDA loan. And this is basically the US Department of Agriculture, which ensures these loans that you actually go ahead and purchase property with 0% down that's further away from the cities. There's an incentive to purchase to purchase away from the city in the rural areas. And like I mentioned, if you are a veteran, again, thank you for your service. You can purchase a property with 0% down. And now you have these grants. And one of the things that I want to mention as well is not only do we have these grants, these NJHMFA grant for $10,000 to $15,000, depending on the county that you're purchasing in New Jersey. But guess what? There's also 100% financing that we do. And what is that? Well, we have a program where I'm using $500,000, right? Depending on where you're at, it could be higher, it could be lower, right? But I'm using $500,000 as a baseline for a single family home. Well, that $500,000, 3.5% of that you need is 17,500. Let's say that the grant doesn't work for you because of your income, right? Or right here's another thing that I forgot to mention about the grant. The grant is a great alternative, but you're always going to be approved for less when if you're using a grant as opposed to if you have the 3.5% down yourself. Because uh, if you're purchasing a property with no money out of pocket, basically, right now the debt to income ratios, the amount of mortgage that you can afford compared to your income is going to drop. That's called debt to income ratio. So you are going to be approved for less of a home, right? If you don't have the 3.5% as opposed to if you have the 3.5%, right? But right here's a cool thing, right? What can you use for down payment or closing costs? Well, if you have a 401k, a pension. I bought my first house in 2008 with my 401k. I borrowed against my 401k and I paid myself back little by little, right? You can get a gift. You can have stocks, bonds, other investments. What you can't use is get a credit card loan, right? You're gonna go ahead and get a credit card, take out $15,000 on a credit card for it, right, to buy a house. Or if you can't show up with a suitcase full of cash at the closing table, right? We have to document it. Because of the anti-money laundering laws after 9/11 in 2001, right, where we have to follow the money. Anytime there's a cash deposit into your account is going to be questioned, right? So these are the things that you cannot use. Now, this is super important what we're talking about, right? Because there's different strategies and everybody's different. You may only be able to get an FHA loan. You may only be able to get a conventional loan, for example. Maybe you can do multiple loans. Maybe you can do neither. And we got to go with what's called a non-QM mortgage, which now you have a big down payment. Like I work with a lot of self-employed people, for example, and they earn the income, but they don't report it, right, for tax purposes. It's legal. They have write-offs, right? But I got to go by the net income. But now the net income that a self-employed borrower reports is not sufficient to buy a house in New Jersey. But hey, they report less income, they save more money than I pay in the IRS. They can purchase a property with a bigger down payment with different programs like bank statement programs. We have P&L programs, right? But typically those programs, those are called non-qualified mortgages. They're not on that list that I showed you a couple minutes ago So you have to mitigate the risk by putting a bigger down payment, and that typically also comes with a higher interest rate. But again, this is why this pre-approval and doing it correctly can cost you your dream home, right? A pre-approval is not an obligation. A pre-approval is simply a better understanding of where you're at in your home buyer journey. You may be more ready today than you think, but even if you're not ready, wouldn't it be better to talk to an advisor like myself to guide you in the right direction so you can reach your destination much faster, right? Do you have some credit repair that you need to do? We have computer algorithms called credit wayfinders that tells you what you can do to improve your credit. And we're not a credit repair specialist. We don't have to pay. You don't have to pay for us. Now, if there's a lot of derogatory items and lates and those kinds of things, right? I can connect you to some credit repair specialists. They can help you get there quicker. But you can do these things on your own. It just might take a little longer, right? Because you have to learn how to go through it. But it's about knowing what you can do or can't do, right? I have a family that owns a restaurant, and they're asking me what they need to report this year, and they reported a loss last year. So in order for them to buy a house, they had of that they want, they got to report close to $200,000 in income because they have to average it out for the last 2 years, right? But if you report $200,000 in income, you're going to be paying an arm and a leg to the IRS. So what we decided, hey, they're going to report $100,000 this year. They're going to take care of the tax liability. They're going to go ahead and report $100,000 next year, right? So at least they're not ready now, but they have a path, and that's what we do. We put you on the right path. Like I mentioned before, getting pre-approved is not an obligation, but it gives you a clear path of where you need to be, right? Think of it like a personal trainer. If you want to achieve weight loss goals or fitness goals, you can work with a personal trainer to get you there much quicker. There's accountability, right? And there's a plan. Cool. So now, a pre-approval helps you determine how much you can afford to spend on a home based on what I just mentioned earlier, your income, your credit, your assets. A pre-approval is going to help you determine not only how much house you can qualify, but it's going to increase your bargaining power when you're negotiating with the seller. See, when buyers are making offers, I also call the seller's agent, introduce myself. They Google me and see that I have 160 plus 5-star reviews, and I work with the third largest retail lender in the country. We have all these programs and products. What the seller's looking for is certainty. Sometimes that doesn't mean that they're gonna always go with the highest offer. Sometimes they're gonna go with this offer that's structured the best and that is certain to close. This is also gonna estimate your monthly payment and your total investment, right? This is important because people buy houses based on what that monthly payment is. Listen, I am a proponent for buying a home. Homeowners are 40 times wealthier than renters. If you're renting for $2,000 a month, in a year, you're throwing away $24,000. In 4 years, you're throwing away close to $100,000. But if you're buying a $500,000 house and a $500,000 house appreciates at 5% a year, okay? 5% is $25,000. So instead of throwing away $24,000 on a $2,000 rent, you're gaining $25,000 in equity. So in 4 years, instead of being $100,000 poorer on the renter, you're going to be $100,000 richer. It's a big swing. But I say that to say this: I do not want you to be house poor. Owning a home is going to build generational wealth long term. It's a long term gain, right? So I don't want you to buy a property and then you default on the loan, even though the numbers on paper work. You know your lifestyle, right? We have to make sure we put you in the right product. You also have to understand that buying your first home doesn't necessarily have to be your dream home. People use that home as a catalyst to get there, because now, just going back to that, what I just mentioned, a $500,000 house in 8 years is going to be worth $200,000 more at the rate that is going, and because this is a this is an appreciation state because of the demand, right? Even if it settles, historically, real estate increases between 2 to 3%. We've been beating that because of the lack of inventory. But the fact of the matter is, now you can go ahead and put a bigger down payment on your dream home next. Most people stay in their homes or refinance those homes within 7 years, even though they get a 30-year fixed interest mortgage. Make sense? And then a pre-approval is going to identify which loan product. If you are, for example, if you have your work visa and you don't have your work, you're not a permanent resident. Last year, I could have done an FHA loan, but this administration changed it. I can't do an FHA loan anymore. You have to purchase with a conventional loan, which is going to limit you a little bit. You have to have higher credit scores. The income ratios have to be a little lower because it's not insured by the government, right? What's better for you? If you have a high credit score, right? I have a gentleman right now that's putting 5% down on a property. He has a high credit score and he's able to buy out PMI, right? So his payments would drop. That was a strategy that we went. So we figure out what is the best strategy for you, right? Cool. So now this is what I want you to do, guys. Right? First, you have to call us and get pre-approved, but we have to make sure that when you get pre-approved, things stay consistent because of and that's why we have to update pre-approvals every 90 days to make sure any changes. But if you're gonna move, you gotta let us know. If you continue to pay your rent on time, continue to use your credit as normal. 30% utilization is ideal, right? You want to keep working at your current employer, and if you are gonna switch, let us know because sometimes that can impact you, right? I have people that during the loan process switch jobs as long as it's a full-time job, right? And it's not going to impact the income. But if you get a job opportunity and you're going to make more money, right? You got to just have those conversations. What I've had people in the past do is they get pre-approved and they have a W-2 job and then they go ahead and leave it and become an Uber driver. Now they can't buy a house for 2 years because they're self-employed. They're 1099. And now we treat 1099 employment. We have to average out the last 2 years with an FHA loan because your income is inconsistent. Same thing with overtime. Same thing with bonuses, right? So anything that changes, we have to be aware so we can guide you in the right direction. Believe it or not, listen, I'm working with more people that have been pre-approved and I'm working with them that are not currently looking for houses and people that are currently under contract. This is a process, right? You want to stay current. You don't want to be behind in your credit. You want to, we want to collect all the documents up front, but throughout the process, right? And I have this what's called an expectations calls with everybody, so you understand that an underwriter is going to scrutinize and look at line items and your bank statements and whatnot. And that's why a good pre-approval is super super important, right? But those things get looked at, right? And this is why we have one of the lowest default rates in history because only people that are actually can afford a house are buying a house, right? So don't make any large purchases. Don't change bank accounts, make any large deposits. Don't transfer balances. Don't close any credit card accounts. Believe it or not, closing credit card accounts can impact you negatively. If you consolidate your debt again, you might be impacting your closing accounts, and that can negatively impact your credit. If you're applying for new credit, you get an inquiry that can impact it. Don't max out or overcharge your credit card accounts, right? So, listen, having having a pre-approval, even if you're not ready today, you're gonna buy in a year. It's like having a mortgage advisor in your corner. People call me all the time, and I spoke to them 3 or 4 months ago to ask me questions, right? But eventually, we'll get you to your end destination of entering club homeowner. I'm gonna skip this slide. I'm not a fan of this slide. It's just basically telling you some things about like using your Bank of America, Wells Fargo. Listen, they have if you can get approved with them and you're happy with them, I'm good with any bank that is going to take you to the finish line, but they can be restrictive, right? To get offers accepted, they're not going to be working Saturdays and Sundays and run numbers for you and whatnot, right? But I'm all for any institution that's going to help you, right? Most of the time, I can approve people for more than what a bank is because listen, a bank doesn't really make money, right? To in mortgages, they make money lending your money to other people. Like that's their main business model, right? So if there's any hair, if there's any issues with files, they may not know how to fix it. A lot of times, they don't even know how to do FHA loans, right? Now, home inspection, super important, right? Cost you $750 or so. That's part of the closing cost, but it can cost you thousands if you don't do one because you might be able to you purchase a property that you're unaware of deal breakers. You can use your negotiating power. You can ask for credits, when you're going through an inspection. Because when you are looking at a house, you are looking at it with googly eyes, right? You don't know what's behind the walls, and that's why you want an inspector to go out there and really really tell you, hey, not only what's going on with this house now, that you can actually say this is a deal breaker, we have some environmental, we have some structural issues, or hey, you might have to replace the roof in 5 years, right? You might also say, okay, well, that's okay, I'll replace it in 5 years. I'll go ahead and I'll factor that into purchasing the property. So you might miss having a forecast of future repair costs. You risk inheriting safety issues such as mold, radon, carbon monoxide. Sometimes somebody does a basement without any work permits, right? That's why we have to get a CO, certificate of occupancy, because you don't want to take a property that's been done illegally, right? Because now you have a fire and the electricity was ran without permits, and now the insurance doesn't want to do a payout. These are all things that skipping a home inspection can lead to, right? Choosing the wrong team could cost you thousands of dollars. It could cost you your dream home. It could cost you your time. Your lender and realtor should have a working relationships. I work with new realtors all the time, and I want to make sure I build a rapport with them quickly because we are both working to be on your corner. We should be accessible and available, right? When we all have families, and I don't pick up a call at 9 o'clock at night, all right. But you know my schedule. I have a calendar, right? And I have a team. We have a support team that if you're in your lunch and you call me and I'm in a meeting and I can't pick up, I have a team in my office that is going to help you and check to see where your file is at. And this is what we do so we can really give a great experience to you. Okay? So, how do you feel now? Do you feel a little less concerned or stressed out, intimidated, anxious, or uncertain? I hope you do. And if you don't, right, schedule a call with me. We can talk about your situation, right? We could talk about your situation. We could talk about what are the next steps. So the best way to reach me is text me 786-444-4160. I'm gonna pop it in the chat 786-444-4160. You can follow me. I'm gonna pop it in the chat again. You can follow me at Eric Estevez, the lender, on Instagram. I'm on TikTok. I go live on TikTok. So I can always I go live 3 times a week. So I answer questions. I help the family. So far this year that found me on TikTok got pre-approved and they already bought their house. Right? I am here to add value. So with that, I'm gonna open up the chat room, guys. What questions do you have for me? What questions do you have for me? Don't all jump at once. And if you have no questions, it's okay. You can always, again, follow me, send me a DM, right? Okay, so Kimberly says, what about Middlesex County? Kimberly, Middlesex County is the same as Hudson County, right? $15,000, right? $15,000 as a down payment grant, depending on your income, okay? And North Jersey is typically 15,000, right? Because of the prices of the houses are higher. You know, when you're looking going down further South Jersey and you're looking out west, right? The prices of homes are a little lower than now. You're looking at $10,000 in grant money. Make sense? But hey, if you're buying a property, if you're buying a $600,000 property, right, and you need $21,000, and that $15,000 doesn't cut it, or you can't get the additional $7,000, and maybe 100% financing will help you. Okay. All right, Heather has a question. My question is about debt to income ratio. What hurts me? Is that something to work on? Great question, Heather. So here's what we look at. Here's how we calculate debt to income ratio. There's two ratios. I'm going to use this as an example, Heather, because it's pretty simple math. Let's say that you and a partner together, you're earning $120,000. You divide that by 10, by 12, right? Now you're earning $10,000 a month. Okay. In an FHA loan, you can go to 46.99% of that amount in your mortgage payment, right? So now your mortgage payment can technically be $4,700. You may not want to pay a $4,700 payment, but that's what you may be able to go to. But we have to now look at your other debts, your student loans, car payments, your credit card payments. You can go up to, in an FHA loan, up to 56.99%. So your mortgage payment included all the other monthly liabilities, your monthly payments. I don't care about how much debt you have. It's about what are your monthly payments? What is your credit report showing? Right? If you're gonna max out that $4,700 mortgage payment, you only have about $1,000 to play with your monthly liabilities. If you go with a lower monthly payment, right now you may be able to have more debt. So that's why I have to say, hey, today this is what you can afford. But with this debt, if you eliminate these two debts or these two credit cards, you'll be able to go to this amount. A lot of times, Heather, a lot of times, Heather, I tell you this, I don't tell you to pay it because you can pay that at closing. That could be part of the equation. I gotta say, listen, you can afford this house, but you gotta bring $5,000 to pay this at closing so the title company can send a check, and that's how we'll be able to underwrite it. I don't want you to pay anything without you even purchasing a property, unless Heather, by paying some of the debt is gonna impact your credit score so you can qualify for a loan. That's called a rapid rescore. Make sense? That's why we have to look at it, right? If you have student loans, even if they're deferred, they're going to show up as 0%, right? They're going to show up as zero payment in your credit card. But I have to now calculate 0.5% of that, right? Because they're still not deferred. I mean, they're deferred, but you still might have to pay for them, right? Unless they get forgiven. So I have to calculate those things. Make sense? Cool. Awesome. Thank you, Kimberly. I appreciate it. Yeah, and I think you had a question in the past. What about if you don't have a down payment? Is that possible program? Yeah, so we talked about that, right? The programs. We can talk about the grants. We can talk about FHA financing. We can couple that with closing cost assistance. I like to share stories, right? And I put the story on my social media feed. And if you guys follow me, you can scroll and you can see it. I had a family that was paying over $3,000 a month on a house for 6 years. That seller came to them and said, "Hey, I'm selling the house. I'm selling it to you." Right? They weren't planning on moving. They didn't have any savings, not a dollar to their name. Well, I pre-approved them, and their income was too high to get to buy that house, right, for $700,000, right? And then also the payment was going to be too high for them. They didn't want to go that high. So I said, okay, well, what are you willing to do, right? We pre-approved them for with the FHA financing, and they were able to get the 100% financing on the house, and the agent, the real estate agent, did such a nice job that they were able to get a closing cost assistance. So at closing, they got a check back of $1,500 to cover their appraisal and the inspection that they actually covered. So they bought a house literally with no money down. I say this to emphasize that it is still possible, right? It is still possible. You have to be willing to work with the right team. It's a little bit more hard. It's a little bit more difficult because there's a lot of competition that's out there, right? But you have to take a swing at the ball. Okay. All right. So Heather, I've been working on my credit and actually got my score to 680. Great job. But what I owe hurts me still the process. How about rent to own? Is that a bad option? Okay, so now, right, rent to own, right? There's typically no there's some off the wall programs, right? So typically, and there's some companies that are a little, and I don't work too much with them, with those kinds of companies, and you can Google them or use ChatGPT or whatever. But typically, like rent to own, like a traditional bank isn't gonna give you a rent to own house, right? Like you have to work that with directly with the seller. Hey, I'm gonna rent this house, and okay, if I rent it for this many years, what are you gonna sell it to me for? Whatever the case may be. But the banks don't really get involved until there's a contract that you're selling it. But there are some programs, and I know I did one in Tennessee because I'm licensed in Tennessee as well, where there's a person, this company bought the house for the person, and they were on the deed. They were on a deed. They were on a deed, and it was a rent to own program. And then now, when this person got their credit score up, they refinanced it. And so there are some programs, and you have to really look into those things, but we don't really typically deal with rent to own. Make sense? Okay, that's amazing. Yes, I need to schedule a call with you. Being a single mother is so hard. No one wants to rent me. Yeah, I get it. Now listen, it's Heather. It's about having these conversations and about knowing what your options are, and at least having a plan, right? So yeah, send me this message. Um, right now, you can text me, and after this call is over, I'll be able to send you my calendar, and we can schedule a call to see where we're at. Kimberly Davis, can my mom help with my purchase? Yes. Right. So, and this happens often. The median income of somebody in New Jersey is $78,000, but yet the median price of a single family house is $450,000. $78,000 income is not going to be able to get you a $450,000 property because of that's income ratios. We have to look at property taxes. We have to look at the interest rates today, right? And houses in Jersey continue to go higher and higher. So typically, you need someone else, right? Whether it's a partner, right, mom, right. It could even be someone like your mom if she's retired and she gets Social Security income, but that helps. Child support, alimony, right? Those things count. So I have a home, I have a loan right now where it's the parents and two of their kids that are buying the house together, and they all have income, right? They're all gonna live in this property together. So the more income there is, the higher of a home you can get, right? Make sense? Great question. Cool. Guys, listen. Again, I urge you to text me, schedule a call, follow me on social media. I'm always posting some information on there. Um, if you want to schedule a call with a partner, with your mom, with someone like that you, I'm here, right? I want to talk to as many people as possible. The more people I talk to, the more people I help. Um, and yeah, and guys, I want to guide you in the right direction. So reach out to me, right? And if you know of anybody that's looking to purchase a property, right, or refinance, send them my information, right? I wanna be able to help not only you but the people in your circle. Kimberly says, "Do you help with building homes?" Okay, so we have programs, right? We do have construction. We do have construction to permanent programs, but those are much more complicated, Kimberly. As a first-time home buyer, right, you can purchase an existing structure at 3.5%. If you're gonna build a home, right, now you're talking about purchasing land, buying it cash, or financing 50% of it, putting a big down payment, spending thousands of dollars on an architect, zoning board, right, contractor, bringing that to a bank. This is how much it's gonna cost, and then you gotta have a bigger down payment. Much higher risk. I will say this, Kimberly, right, and this is great that you mentioned this. We do renovation loans as well, right? Well, what are renovation loans? Well, renovation loan is if you find property that meets the criteria, has a space, is in the right neighborhood, in the right school system for your kids, but maybe it's old and needs some updating. As long as you qualify for the renovation, if I can approve you for a $500,000 house and you see a house for $400,000 and you want $50,000 to update it, we can do it. I'm doing a condo right now in Miami where they're buying a property and then they're using a renovation loan to update it. So we also have renovation loans. And what that does is it opens up different opportunities, different options for people to buy in the competitive market with where inventory is scarce. Make sense? But we have dozens and dozens of products and programs. Our job is to figure out where you're at and to give you different options to meet your goals. Make sense? Cool. Guys, I applaud you once again for joining this webinar. The fact that you came at 7 o'clock on a Thursday really shows that you're committed to get into the process. Is about taking one step at a time. And I hope to be that mortgage advisor to take those steps with you. Hit me up, reach out to me, follow me on social media. I look forward to hearing from you soon, guys. Have a great night.